Hello guys, in this video we'll be talking about a very important concept in taxation, and that is the difference between VAT or value added tax and sales tax. And I will be elaborating this with an example, but before that I'll be giving you a simple definition as to what is the main difference between the two. So remember that sales tax is charged at the end stage. That is, a retailer, when a retailer sells a product to end consumers, he charges sales tax, and the percentage could be anything. It varies from country to country, but it is only charged at the last stage of the supply chain. Whereas value added tax, as the term dictate as the term reveals, that it is charged at every stage in the value addition. So for example, when a manufacturer buys raw materials from a producer, the producer would charge him sales tax. And similarly, when the manufacturer sells goods to a retailer, he would charge him sales tax. And similarly, when the retailer sells goods to the end consumer, he would charge him the sales tax. So as you can see, the value added tax or VAT is charged at every stage in the supply chain. So let's elaborate this with an example. So in this example, there are three stages in the supply chain. The first is the lumber company, remember, which supplies raw material to the furniture maker, and then the furniture maker, after making the chair, sells it to the retailer, and the retailer sells the chairs to the end consumers or to shoppers. So uh, the first transaction is a lumber company sells $100 of wood to a furniture maker. So when the company sells this wood worth of $100, it would invoice the furniture maker not of $100 but of $110, because it would also apply VAT at the rate of 10%. So 10% of 100 is 10. So 100 plus 10 is 110. So the lumber company would invoice the furniture maker at the cost of $110. Okay, so as you can see in the third column, that is VAT, value added tax, the furniture maker pays the lumber company 110, and the lumber company remits $10 to the government. So remember, the cost for the lumber company, including the profit which he make, would is $100. So the $10 which he charged extra to the furniture maker, he would deposit that with the tax authorities. He would not keep that $10 over and above $100 with himself. He would deposit it in the tax to the tax authorities. Remember, at the first stage there is no sales tax, because as we talked, sales tax is charged at the last stage in the supply chain. The second step is the furniture maker makes a chair and sells it to a retailer for $300. Remember, the furniture maker incurred some costs, and then he also kept some profit margin for it, and then he was willing to sell that chair to the retailer for $300. But wait a minute, he will also have to charge sales tax or value added tax at the rate of 10%. So 10% of 300 is $30. So he would invoice the retailer for 300 plus 30 equals to $330. So see the third column, the retailer pays 330 for the chair, because he has been invoiced by the furniture maker for 330. Instead of sending the full $30 amount to the government, which the furniture maker received, the retailer gets to subtract the $10 of taxes that already paid to the lumber company. So remember that the furniture maker received $30 of taxes in the invoice of 330, but he will not pay all of that $30 to the taxation authorities. He will deduct the tax of $10 which he paid to the lumber company, and the net amount is $20. So he would only pay to the tax authorities $20, because remember, if he paid full amount of $30 to the company, then it means that effectively he paid $10 extra to the sales tax authorities. But remember, value added tax is the main intent of the value added tax is to transfer or pass on the burden to the end consumers. So if he deposited at this stage $30 and $10 he paid to the lumber company, he would be paying $40 to the taxation companies. But that's not the case. He would subtract from 30 the $10, and he would only be paying $20 to the tax authorities. So next stage is that furniture maker sorry, the next stage is that retailer sells the chair to the end shopper for $500. Remember, the $300 were the cost, and retailer would keep his own margin, and the cost at the price at which the retailer is willing to sell to the shopper is $500. But wait, he will also have to charge value added tax at the rate of 10%. So 10% of 500 is $50, but he will not pay the retailer will not pay that entire $50 to the tax authorities. He will deduct $30 which he paid to the furniture maker. So difference for 50 minus 30 is $20. So he would deposit $20 in the tax authority. So remember, the whole tax value added tax paid in the supply chain to the tax authorities was $10 at the first stage, $20 at the second stage, and $20 at the third stage. So the entire tax which the end consumer paid is equals to the sum of these, and which is $50. Now remember that at the stage number 3, sales tax also comes into play. And remember, we are making a comparison between value added tax and sales tax. Sales tax is only charged at the end stage, that is when the retailer sells the chair to the shopper. So under the sales tax, the shopper would pay 550 and the retailer would remit entire $50 to the government. So remember, in both the examples, in value added tax and sales tax, the end consumer is paying $50 to the government, because this is the intent of the taxation authorities, that ultimate burden of $50 would be passed on to the end consumer. But the difference is that at stage 3, the retailer is depositing only $30 to the taxation authorities, because 20 he would because $30 out of $50 has already been deposited to the taxation authorities. $10 was deposited by the furniture maker, lumber company, and $20 was deposited by the furniture maker. So $30 out of the $50 was already deposited to the taxation authorities, and the retailer would only deposit $20 to the tax authorities under the value added taxation scheme. Whereas in sales tax, he would have to deposit the entire $50 to the taxation authorities, because no tax has been paid to the taxation authorities as at this point. So that's the difference. Now, what is the benefit of value added taxation over sales tax? Because most of the countries have adopted value added tax as of now. This is the main advantage, is that the government gets to keep the tax at every stage. It does not have to wait until the product is sold to the end consumer. And the second advantage is that of the documentation of the economy. Remember, in sales tax, as you can see, the first 2 stages are not documented. The government does not know at what cost the lumber company and the furniture maker sold to the next stage the products, what was the cost. But whereas in VAT, government tends to know the profit the cost which each of the companies is charging to the next stage. So the main advantage of VAT is that it results in documentation of the economy. So that's it for now. I'll be making more videos on taxation. Do subscribe to the channel. Thank you.